It's fair to say that many Australian expatriates first considered moving abroad to help reduce their personal taxation costs. In many countries of assignment, the local tax system may be significantly less than Australia, such as most of Asia and the Middle East, where in some places, like the United Kingdom and the USA, the tax may at times be even higher than in Australia. This is often compensated by higher earnings potential and the career opportunities, therefore making the decision to relocate from Australian shores still a profitable one, as the capacity to save is now greater than whilst living in Australia. The Australian tax system has undergone significant improvement in the last decade, with personal tax rates lower, tax thresholds on the rise, and retirement incomes becoming tax-free. That aside, the lure of expatriate life still remains strong, and the opportunity to improve your overall situation remains if you properly plan during your time abroad. In this video, we will quickly cover some of the key Australian tax issues you face as an expatriate. I would always recommend a full consultation, but at least this will stand as a guide for you initially. I also wrote the book on this, The Aussie Expat, the Luckiest Person on Earth, which is a complete guide for you and can be purchased off our websites, and you may also want to look out for our regular seminar presentations. Let's firstly look at when you leave Australia. If you move your home and family abroad, you are likely to be considered a non-resident for tax purposes, which basically means that all of your salary and non-Australian income is tax-free. In addition, profit on the sale of and income from Australian shares and managed investments will become tax-free while you live offshore. You will, however, be required to bring to account any capital gains tax up to the time of departure, or you can opt to delay the tax potential until the actual sale. Any Australian property holdings will remain taxable throughout and offer the opportunity to do some very effective tax planning, as any holding cost or negative gearing can be carried forward to offset future incomes. This should not be underestimated and is your most powerful tool while overseas. Generally speaking, you will not be able to access your Australian superannuation unless you have already reached retirement age, and your funds will remain invested for the benefit of your future return to Australia. Your family home can remain free of capital gains tax, as the principal residence exemption can apply for up to 6 years, even if you choose to rent the house out. Whilst you're away, the most important thing to do is to save as much as possible, hopefully enough to buy or pay out your future home when you do eventually return to Australia. I cannot stress the importance of this enough, as being debt-free on your home when living in Australia is the best possible outcome. You should, however, resist the temptation to reduce the loan until the day you actually move back into the property. The main reason for this is the great tax benefits available as an expatriate for property negative gearing. Any shortfall from the expenses and interest over and above the rent collected is allowed to carry forward indefinitely to reduce future tax on rental, capital gains tax on sale, or indeed tax on your future Australian salary when you return after your time as an expatriate. This can be further enhanced by the attractive depreciation allowances available on new or near new buildings or renovations. It encourages you to strongly consider additional property investment in Australia throughout your time abroad, as there is no limit to the number of tax losses you can build up. You'll be pleasantly surprised as to how affordable owning an Australian property is when you have a tenant helping you pay the mortgage. Of course, you need to be sensible in what you do and not overstretch your budget. Also, it's essential that any property you own grows in value by more than the holding cost. Otherwise, you're not gaining financially. So choose wisely and make sure you fully assess the financial implications of your decision. Our unique financial calculator, the Property Tax Estimator, will be invaluable in helping you with your decisions. It's available free on our websites, so make sure you take full advantage of it. It will show you the full purchase costs, the holding costs, finance and tax implications, as well as the overall return on investment. So all the information you need is readily available to you. Through a safe and sensible strategy with property, it is possible to achieve many years of tax-free earnings on return to Australia. Acquiring Australian or other shares is also a good idea, as all profits made up to your date of return will be tax-free. Don't be too aggressive, as always remember this is your house fund. When you eventually return, you may well sell these shares to pay out the loan on or acquire your residence, and that can be done without Australian tax cost. Any cash savings that you have built up are also tax-free and can be transferred to Australia without fear of tax consequences. If you have purchased any non-Australian property or investments along the way, these are required to be valued by a qualified person, and only profits above that valuation would be subject to tax in Australia when the asset is eventually sold. As you are once again a resident for tax purposes, now that you have moved back to Australia, all the income from rents received anywhere in the world are now subject to tax and will need to be declared in Australia. It is likely that your time abroad will be longer than you originally expected, with the average expat coming for 2 years and staying away for 7. It is important that you make the most of it from a financial perspective. In summary, remember to tidy up your affairs on departure, save as much as possible, delay reducing any property loans until the day you return and move in as your home, and consider purchasing additional property in Australia while you are abroad. By all means, enjoy yourself, but remember to give some thought to your financial future on return to Australia. If you do so, you can be assured that your time as an expatriate will not only be full of wonderful memories, but it'll also be the period that changed your future in the most positive of ways.